Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to all the trade day team to the Monday, the 9th of June, Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome, everyone. We'll go through our slightly different run through for a Monday where we take a little bit of a bigger picture look at the shape of the week to give us an idea of what's coming up throughout this coming week. Commencing 9th of June. So we'll take a look at the bigger macro fundamental geopolitical central bank data driven events that are coming up. And why do we do that when we're day trading at trade day? Well, it might give us an idea of where potential volatility points are coming out further the week and maybe where lower volatility points are going to be as well. And it might be that you adjust your trading strategy depending on where you think the more or less volatile times are going to be. So let's tick off. We have our two reports in here: macro matters and macro summary. So in the columns below where you are now, if you're watching this live, or if you're watching on the recording in the Trade Day members area. If you're watching on YouTube, you won't be able to access this. But if you're a Trade Day member and you're looking at it in the Trade Day members area, you'll see below there are three columns. The left-hand column is our technical analysis section from Market Chartist, which is me. And you'll see the technical analysis reports on the left-hand column. The middle column is the macro fundamental section, which has got both the more in-depth macro matters. You can see it spans over 5 pages in here, some more in-depth, and here's the summary. So these are bullet points here, the summary of what's in that macro matters. And then the right-hand side, we then have our news items, the most up-to-date news items that we have from our partners on the Squawk service. Please do use that Squawk service. It's an invaluable tool in these times in here that we are currently in, or all the time really, but particularly when we have unknown pieces of news hitting the markets, not scheduled news, particularly from the US, particularly from the Trump administration. So they're keeping an eye on all the different social media. They're keeping an eye on rumors. So it's good to have that Squawk service. But they also provide us the news service as well, with the most updated news items on the right-hand column. So we're going to start with looking at the weekly macro matters, looking back and looking forward. So last week we had solid gains, not just in the US stock averages, looking at the stock indices mostly, because that's what most of you guys are trading. So we saw markets up significantly. The S&P was up 1.5%, NASDAQ 2.2%, Dow 1.2%. Russell 2000 led the way, 3.2% up. Also, global stock indices, though. So the MSCI All Country World Index hit an all-time high last week. So European markets were further lifted by the dovish ECB, and China indexes advanced in hopes of fresh stimulus. So markets are pretty strong around the world. Trade worries remain in place, but there was a positive call between Trump and President Xi of China last week. No developments on that, but we're looking for developments potentially today, as both US and China are in talks in London today. And we've got some articles from the major news wires covering that. So maybe something further we're going to get potentially today. There are still sticking points. Last week, I'm going to skip forward to the PMI data first of all, which was in the first part of the week in here. Globally, it was okay. For the US, it wasn't great. Both the service sector and the manufacturing sector showing sign of weakness. However, that was really trumped on Friday by a strong labour market report. So the jobs report on Friday was better, below April's number, but stronger than expected. That showed a resilience in the market and has helped indices push higher, back up to recent highs on the US going into the end of the week close last Friday. And then we've already mentioned the ECB cut rates, which was expected, but remaining a relatively dovish tone, although also indicating the potential they're coming towards an end of rate cuts in here. And remember, inflation in the Eurozone fell to 1.9%, below the ECB's 2%. So they do have scope to further cut rates if need be. And then the big focus going into this week is going to be on the US CPI data that we have coming up on Wednesday. So the inflation report was obviously super important. You know, the job market remains resilient. If we see inflation coming towards the Fed's 2% level, then we might see hints of a Fed rate cut. At the moment, Fed rate cuts are being pushed back, and we'll come to that when we look at the FedWatch tool shortly. So on the central bank bank side, remember we've entered the blackout period in here. So just going in here to the calendar, 2025 June. So we have the next Fed meeting is next week, Tuesday, Wednesday, with the result coming from the Fed on Wednesday. And they enter the blackout a week and a half before that. So on Saturday, just gone, the 7th, Fed have entered the blackout period. So we'll get nothing from the Fed in here. So nothing from Fed speakers going into this week. So a fairly light calendar on the central bank side going into this week. On the macro data side, really the US CPI is a standout. If we look this week, nothing really of significance from the US. Monday or Tuesday, UK, some significant UK data. The big data, as I say, is the US CPI data. We also get US PPI. Far less important. US CPI certainly trumps the CPI data. So we get the US PPI on Thursday, and then US consumer inflation expectations data from the US Michigan consumer and data in here that we get on Friday. It's not a huge piece of data, but it's always worth watching. But the really big piece of data this week is US CPI. So, and all of that's kind of summarized in here in the summary in here. So we look into today, you can see here nothing of real note in here. There's one other event which I'm going to just go to now. We do have a US Treasury auction there. US Treasuries have been moving, threatening to move to higher yields, and there are concerns about higher yields. So US trimmed some of the losses last week, winning some respite after Thursday's auction of 30-year debt. So I'm sorry, ahead of the Thursday's auction. So we're going to watch out for that. We've got the 30-year auction in here on of the US bond market, and we're going to watch out for that because that could be important for yields to see. Because obviously, if we get a poor auction in here, it means lower prices, higher yields, and there is a threat of a dislocation maybe in the bond market moving to higher yields, and that would be negative for stocks. I haven't been able to see the America, the briefing has not dropped into it. Let me just have a quick in here, see if I can find it. Oh no, here I found it. Here we go. So the morning briefings, America. That's for today. Yeah. So in here, LA cash has escalated as Trump and Newsom argue over National Guard. I mean, this is obviously it's not a great situation in the US. However, unless it really escalates in a very, very negative way, it's not particularly impacting onto financial markets in here, despite these what's looking quite negative with the demonstrations in LA and the National Guard going in. The US-China trade talks are really the main focus for us in here. And so we're going to certainly be focusing on that. Here's what to expect. Let's see if we've got time on this because it's just a video in here. So I'm not sure what the timeline is, but seeing this in the US, maybe on the US day. So by lunchtime, potentially by lunchtime today, if we're going to get anything, because then that's going to be towards the end of the London day, by lunchtime US. So maybe watching out for that. Nothing of really huge news in here. Meta, multi-billion-dollar talks to invest in artificial AI startup. Israel intercepted an aid ship. I mean, there's nothing in here of really big news. Apple is got their their internal, what's it called? I can't remember what it's called in here. Their developers. The developers conference in here. So we're watching to see if there's anything interesting coming out of that maybe in here from Apple later today. So just keeping an eye on that, the developers conference in here today. So that we could get something out of that, which might impact onto Apple and then in turn the broader markets in here. Stocks hold steady as investors are US-China trade talks. I mean, that's the headline everywhere in here. London showdown, that's again pointing to the trade talks because they are in London. US-China resume trade talks with focus on rare earth elements. Wall Street futures subdues ahead of US-China trade talks in here. World shares climb, dollar eases ahead of US-China talks. So all eyes on the US-China talks. Potentially we're going to get something today, maybe by the end of the London day, which is going to be, remember London 5 hours ahead of Eastern time. So maybe lunchtime, early afternoon, we might get something on that coming out. If we go and take a run around the global indices, Asia looking pretty good in here. Nikkei nearly 1% up and the Hang Seng up 1.63. Remember, they were playing catch up with the US, which rallied on Friday after the employment report. So they're playing a bit of catch up there. European exchanges fairly slightly negative in here. So if we look around the European bourses, this morning. We have the UK FTSE slightly lower and the French CAC as well, between 1 and 2 tenths lower. German DAX notably lower at 0.5% lower. And if we look at the around the US in here going into today, the S&P 500 and the NASDAQ pretty much unchanged in here going into this morning. Turning our attention to the bond markets now, after that strong employment report on Friday, pretty much now 100% not expected for no change at next week's meeting. If anything, there's a 0.1 chance they might hike rates, but that's not going to happen. But basically, effectively 100% chance in here of no change in June. And now since Monday, since Friday's data, this was a higher chance. This is for a 25 basis point cut in July. This has fallen since Friday. So because of that strong employment report, less chance, less possibility potentially of a rate cut as early as July. So now only a 16% chance for a rate cut in July. Still, the money's on the September meeting. 38% chance though that they're still unchanged at September meeting. And now if we go and jump to the end of the year, very little chance we're going to get more than 2 rate cuts. So we are expecting probably 2 rate cuts. But if we add these two together in here, this is for 3 rate cuts. So we're at 24% chance now only of 3 rate cuts. So the market now pretty much pricing in 2 rate cuts, 1 in September and 1 either October or December now into the end of the year. Bond yields did shoot significantly higher back higher on Friday, and this is the concern. This is the 10-year yield. But if we go and take a look at our bond market, outlook in here on the price side, saw significant sell-off, so lower prices, higher yields in here, and we saw that across the board because there's less chance of potentially, look at 2-year now, back all the way back to the recent lows. So having hinted at bottoming patterns and looking to higher prices, lower yields, now looking at lower prices, higher yields, because there's less chance potentially. The economy looks fairly firm, less chance of a rate cut. The 30-year in here, we are just hanging on to a bullish tone, but all eyes going to be on that 30-year auction on Thursday, and that's getting close to shifting to more bearish as well. But certainly the 10-year, 5-year, and 2-year all looking more bearish. That's lower prices, higher yields. On the equity indices, S&P 500 and both the S&P 500 and the Nasdaq in here still looking bullish in here. Still sitting at recent highs. If we jump here, you'll see it's right up at recent highs. On Friday, we had a new high. These are the all-time highs up here, so we're not too far away from the all-time highs and staying positive going into today on both the S&P and NASDAQ. Look at that 13-period EMA here on the NASDAQ. The market hasn't closed, for all this kind of consolidation that we've seen in here from the latter part of May and early June. The market not closing below that 13-period EMA and coming right off of it on Friday and back up near the recent highs. The S&P actually making a new intraday high, and again coming right off that 13-period EMA, again supported above there, so and holding at the top of that range in here. So no real news expected on the data side, but we are watching out for any further developments on those US-China trade talks. And any development on that that's seen as slightly positive could see these markets shooting significantly to the upside, and that could potentially come, as I say, just repeating. Remember, it's the towards the end of the maybe the European UK day with those talks in London, so it could be early to mid afternoon on the US side. We could get some development there, so watching out for that going into today. So we'll listen out for that Squawk service. All right, I'm going to wrap it up there, guys. I'm going to wish you all a great trading day. Take care, stay safe, and I will back you with another Bull versus Bear webinar tomorrow. Bye.